Welcome to this explainer. Today, we're doing something really exciting. We are going to run a comprehensive financial health checkup on a major blue chip stock to see exactly how market analysis works in the real world. We talk a lot about investment theories, but today we're actually bringing those theories to life. We're going to tear down the financials, look at the charts, and evaluate the macro environment of an actual, living, breathing corporation. Okay, let's dive right into this. Here's our roadmap for today. We'll start with Sharia-compliant investing explained. Then we'll meet Telekom Malaysia, dive into technical analysis and price, check out the valuation and performance ratios, look at macro factors and trends, and finally, deliver the final investment verdict. It's a structured journey from theory straight to practice. All right, part 1, Sharia-compliant investing explained, or as I like to call it, the rules of the game. So, what exactly is Sharia-compliant investing? Well, it basically redefines how a lot of people view the market. It's an ethical framework that dictates how a company operates and handles its finances, and it's officially recognized by bodies like the Securities Commission Malaysia. But here's the interesting part. This isn't just for one specific demographic. Because of its incredibly strict ethical rules, this type of investing has a massive crossover appeal for non-Muslims too, especially those who are looking for sustainable, highly regulated, and just ethically sound opportunities in the capital markets. To actually pass this ethical test and build a compliant foundation, a stock absolutely must avoid certain elements. First up is riba, which means transactions involving interest. So a highly leveraged company drowning in interest-bearing debt, yeah, they won't make the cut. Then we have gharar, meaning excessive uncertainty, so you definitely won't find any wild speculative derivatives here. And of course, maisir, or gambling, along with any other generally illegal or unethical activities. By filtering all of this out, you're inherently left looking at companies with very specific and often very conservative financial profiles. Moving right along to Section 2, meet Telekom Malaysia, our case study subject. Now, to be clear, this is not some flashy, high-risk startup that might just disappear tomorrow. No way. TM is Malaysia's absolute largest integrated telecommunications infrastructure company. And they have deep roots going all the way back to 1946 when the Telecommunications Department of Malaya was established. They went through corporatization in 1987 and hit the Bursa Malaysia as a listed company in 1990. So the really crucial takeaway here is that we're analyzing a company with decades of historical data, entrenched market dominance, and a deeply established track record. And they aren't just a one-trick pony either. Today, they're operating massive foundational networks. They handle the heavy lifting of wholesale telecommunications through TM Global. They power business and enterprise ICT solutions via TM1. If you live in Malaysia, you almost certainly know them for providing household fiber broadband through Unify. And on top of all of that, they're leaning heavily into the future with digital services. We're talking cloud computing, data centers, and cybersecurity. This incredibly diversified approach gives them a rock-solid, highly defensive presence in the market. All right, Section 3, technical analysis and price. Let's start charting the behavior. If you take a look at this chart covering a recent 50-day trading period, you're going to see what market analysts call a consolidation phase. Notice how the price action is basically a sideways trend? It's just gently fluctuating between roughly 695 and 780 ringgit. There's no aggressive bull run happening, but there's no terrifying crash either. And honestly, this brilliantly illustrates a stock with low volatility. Sure, it doesn't give day traders those massive price swings to capitalize on, but it is perfectly suited for long-term investors who just want to sleep well at night knowing their capital is stable. Which brings us to Section 4, valuation and performance ratios. It's time to check the financial health under the hood. Our first vital sign here is a return on equity, or ROE, of 14.2%. So what does that actually mean for you as an investor? Well, it means for every single ringgit invested by shareholders, TM generates about 14.2 cents in profit. In the incredibly capital-intensive world of telecommunications, an ROE over 14% is no joke. It shows highly efficient management and seriously strong operational performance. They are taking your money and putting it to work effectively. Next up, we have the price-to-earnings, or PE ratio, sitting at 17.48 times. Think of this as the price tag of the stock relative to its actual profits. It tells us that investors are willing to pay RM 17.48 for every 1 ringgit of profit the company makes. Now, a PE right in this range suggests that the stock is fairly valued in the market right now. It's not some deeply discounted value trap, and it's definitely not a wildly overpriced hype stock. It just reflects sensible, grounded investor confidence. Now, this is absolutely crucial. Their debt-to-equity ratio is just 34.05%. Remember earlier when we talked about Sharia compliance and avoiding excessive interest? This is exactly what that looks like in practice. For every ringgit of equity, they only carry 34 cents of debt. It's like a very conservative, well-managed household budget. They just aren't heavily reliant on borrowing. And this low debt burden makes them incredibly flexible and financially stable, even if the broader economy hits a rough patch. And here is where it gets really good. They reward that stability. As you can see, TM pays out nearly 79% of their earnings directly back to the shareholders, keeping just over 21% to reinvest in the business. That massive payout ratio translates to a really solid 3.59% dividend yield. If you're an investor seeking income, this is quite literally exactly what you want to see. A company making reliable profits, keeping a conservative balance sheet, and returning the lion's share of cash right back to its owners. Let's zoom out a bit for Section 5, Macro Factors and Trends. We have to look at the outside variables. You see, there's this fundamental tug-of-war constantly happening in capital markets. When global interest rates rise, safe fixed income investments like the bonds you see on the left become highly attractive because they offer guaranteed returns with lower risk. But this creates a market risk for equities on the right. Even ultra-stable stocks like TMM can temporarily lose favor to bonds during rate hikes, simply because large institutional investors will pull their capital away from the stock market to chase those higher, safer bond yields. It's an external risk we always have to keep an eye on. However, combating that interest rate pressure is a massive macro tailwind, the rapid advancement of 5G technology. Let's face it, the world's appetite for data is basically insatiable at this point, and this guarantees increasing demand for TM's internet infrastructure, their cloud services, and their digital offerings well into the future. 5G isn't just a slight upgrade. It's a foundational shift that opens up entirely new revenue streams for telecom companies, and it provides a really robust growth narrative to counter any of those broader economic pressures we just talked about. Okay, we made it to Section 6, the final investment verdict. Let's wrap this up. Bringing all the pieces together, our comprehensive analysis shows that Telekom Malaysia is a remarkably solid asset. We are looking at good profitability with that 14.2% ROE. It offers highly consistent returns through a 3.59% dividend yield backed by a massive 79% payout ratio. It demonstrates super low market risk with stable price action. Plus, its defensive nature in the essential telecom sector means it's perfectly positioned to capitalize on 5G growth. And the cherry on top, it wraps all of this in a fully Sharia-compliant, highly ethical financial structure. So, considering its conservative debt, those ultra-reliable payouts, and the massive future potential of 5G growth, we hit our final hurdle. The crucial question you have to ask yourself now is not whether TM is a good company. I mean, the data clearly proves that it is. The real question is whether a stable, low-volatility giant like this actually aligns with your own long-term investing strategy. Does your portfolio need a defensive anchor? Well, that is for you to decide. Thanks so much for joining me on this explainer, and keep learning.